Welcome back to the channel, everyone. In today's video, we're diving into a recent podcast featuring Ray Dalio, the renowned investor, author, and founder of Bridgewater Associates. He sat down with Andrew Yang to discuss the changing world order, money, inflation, and the economic lessons we can draw from past generations. Dalio is known for his historical approach to economics, and he paints a rather concerning picture for the U.S., suggesting that we may soon face a significant financial crisis. Stick around until the end of the video to hear his convincing argument about why we're nearing stagflation, a troubling economic condition. Before we get into the details, don't forget to hit that like button and subscribe to our channel. Your support helps us create more videos like this one, so let's get to it. The podcast begins with Ray Dalio reflecting on his journey and the process that led him to the conclusions he's sharing today. He mentioned that it all started with his interest in history. Dalio pointed out that when he first began studying economic history, he stumbled upon a fascinating realization. He discovered that similar patterns had repeated throughout history, even in different periods. For instance, he cited March 3, 1993, when President Franklin D. Roosevelt took significant action that led to a major shift in economic policy, echoing decisions made for similar reasons earlier in history. This sparked Dalio's interest in exploring the economic cycles of past generations. Dalio explains that many significant events, including wars and economic shifts, were unforeseen in his lifetime, and yet they have clear historical precedents. These patterns are not isolated. They are part of a broader recurring cycle that shapes the global economic landscape. When Dalio connects this historical perspective to present-day issues like inflation and the rise of populism, both on the left and the right, he emphasizes the complexity of our current financial state. Populism, he argues, is not just a political phenomenon, but a sign of deep societal divides. These conflicting values, each side fighting for their cause without compromise, are more intense than ever, and they lead to an unprecedented level of conflict in our society. Dalio also compares the current era with the 1930s to 1945, a period in which similar patterns of populism and economic disparity led to massive shifts in power and economic collapse. This historical context helps us understand the forces at play today and why Dalio sees troubling signs ahead. As the podcast progresses, Dalio dives into the shifting world order and the challenges posed by changing currencies, inflation, and the political climate. Dalio is recognized for his deep research into history, which he uses to connect past events to present-day economic situations. He doesn't believe that the economy operates randomly. Rather, he sees it as a system of interconnected causes and effects, each leading to the next. For Dalio, the current economic situation has been shaped by unprecedented levels of debt, much of which has been monetized and passed through the financial system. In addition to this, the growing internal political conflict, particularly between the left and right, has a significant impact on markets and tax policies, further complicating the economic picture. Dalio is particularly concerned about the rise of war tensions, especially with China, citing misconceptions and rising hostilities. However, he also makes it clear that while his forecasts aren't guaranteed to be correct, understanding these historical patterns is crucial for anticipating potential future crises. One of the most striking points Dalio makes is about the economic system post-1945. When the world entered the American-dominated order, the U.S. controlled 80% of the world's money, half of the global GDP, and had a military monopoly. The power gap between the U.S. and other nations was enormous, and this dominance allowed for a period of relative peace and prosperity. However, Dalio explains that today the power gap has shrunk significantly, with other global powers challenging U.S. dominance. This has resulted in increasing power conflicts and rising tensions worldwide. Dalio also speaks about the way people view cash today. Many believe cash is a safe investment, but in reality, it's losing its purchasing power. With inflation running at 8% last year and interest rates held at 0%, cash is devaluing rapidly. This creates a vicious cycle where inflation strengthens, pushing people to look for alternative investments. The problem, according to Dalio, is that too many people focus on the relationship between one currency and another without understanding that they aren't just competing currencies. They represent choices for transactions, not necessarily wealth preservation. Dalio uses examples of European euros and Japanese yen, both of which are seeing negative interest rates. The same issue was present in the 1930s, where all asset prices relating to goods, services, and currencies declined. In those days, asset prices fell across the board, and it became clear that many traditional stores of value were failing. Today, people are moving their investments into alternative assets, such as gold or real estate, to preserve their wealth. Ray Dalio emphasizes the importance of borrowing wisely, or if not borrowing, investing in assets that maintain their purchasing power over time. He uses gold as a standard reference for value, which has stood the test of time as a solid store of wealth. As the conversation progresses, Andrew Yang brings up a compelling point. With the rise of cryptocurrency in recent years, people have been searching for alternatives to fiat currencies, ones that aren't tied to the traditional monetary systems. Dalio responds thoughtfully, raising questions about cryptocurrency's role in this landscape. Dalio asks, can we digitize money to make it more efficient? Can it hold its value in a way that prevents central banks from devaluing it? Can it be transferred, used, or accepted globally for purchases? These are critical questions that cryptocurrency, and especially Bitcoin, is attempting to answer. He acknowledges that Bitcoin has shown resilience. It hasn't been hacked in over 11 years, which adds to its appeal, but he also points out that it isn't a private asset, and its value still pales in comparison to traditional assets like Microsoft. Bitcoin's total market cap is about $700 billion, which seems large, but it's still a small fraction of global wealth. Dalio also mentions that while crypto may be an appealing alternative to fiat money, it remains highly speculative and has not reached the stage of becoming a true replacement for traditional forms of wealth. Despite the advancements in cryptocurrency, Dalio remains skeptical about its long-term viability as a mainstream form of money. He then shifts the conversation to discuss the broader economic picture, explaining how central banks, including the Federal Reserve, understand that when inflation is too high and the economy is booming, they need to slow things down. On the other hand, when inflation is low, they push the economy forward. But Dalio notes that the Fed's strategy of keeping interest rates low for so long has caused a massive imbalance. They have made liquidity so abundant that it has led to both monetary inflation and financial crisis. People have borrowed more than they could afford, buying homes and other assets on interest-only loans because money was cheap. This excess borrowing has now caught up with the economy. As Dalio points out, the U.S. is now experiencing a tightening phase. The government's rising deficits, combined with inflation, are putting pressure on private investors. Dalio explains that private investors are losing money on debt, including trillions in bonds and pension funds, and they are selling their assets to cut losses. This causes a selling imbalance, which, in turn, leads to a contraction in private credit, a clear indicator that a recession is on the horizon. Dalio concludes that we are entering a period of stagflation, where inflation is high but economic growth is stagnating. He believes that we don't have enough real money in the system to sustain long-term growth. While there's plenty of fiat currency being printed, it's not being used to generate real economic growth or to improve infrastructure, which is why Dalio is so concerned about the future of the economy. So, what do you think? Do you agree with Ray Dalio's assessment of the current economic situation? If you do, or if you don't, please leave a comment below. And don't forget to give us a like and subscribe to our channel for more videos like this one. We'll keep bringing you insights on the most pressing issues in the world of finance and economics. Thank you for watching, and we'll see you in the next video.